What's up guys, welcome to the second episode of Replace Your Paycheck. Today we'll be looking at YMAX. I think it's a very cool ETF, it pays weekly, it's very stable, you can catch some upside. We're going to dive into YMAX, the same format as my previous video. By the way, this is a picture of someone who bought too many shares of YMAX. So in this video, I'll be doing a quick overview of YMAX. So the goal is not to do a deep dive, but just look at what is YMAX, what is their strategies, their holdings, how they're making income with the options. Look, we're gonna look at their management fees and their details. What I did is I created a spreadsheet like I did in my ulti video to do some forecasting and to have some fun with the numbers, and I got the average distributions, the median, the best and the worst payouts. We're going to use those numbers to calculate the fun stuff. So how to replace your paycheck, and can you replace your paycheck with YMAX? So how many shares is going to take you, how long to get to your goal, and then what happens if you drip 100% and if you start cashing out those distributions. I think it's good to look at both because obviously as income investors, our goal is to generate as much income as we can every single week, every single month. But at some point, we got to use that income. What's the point of generating income if you're not going to use it? So some people say they want to use 30%, 20%, 50% of their distributions. We're going to play around with the numbers and see what it could look like if you do start pulling out of these distributions. So before anything, I just want to say this is purely for entertainment and for fun. These are just forecast numbers. I'm not saying these are the true numbers. It is for fun. It's not financial advice. Also for the spreadsheet I'll be sharing in this video, it took me some time to build it. So if you like it, a good way to say thank you is drop a subscribe, like the video. But yeah, anyways, let's get into it. Now let's look at YMAX. So what is YMAX? YMAX is Yieldmax Universe Fund of Option Income ETFs. Just to give a quick summary, if you go on Yieldmax website and you go under our ETFs here, and then you go in the covered call ETFs section. So the team of Yieldmax, they keep coming up with new single stock income ETFs. And every time they come up with a new one, these are all monthly paying. I think after one or two distributions, they added into YMAX. So YMAX is just a regroupment of everything. Essentially, it's a set and forget where you just put your money into YMAX, and every time Yieldmax comes up with a new ETF, you know that you're going to be holding it. So it's a good way to diversify. And as you can see, they have a lot of ETFs, so you don't have to hold every single one of them. And YMAX pays weekly. On top of that, you get weekly cash flow, which is very good. So now if we look at their distributions here, when the fund actually started, they've been paying monthly distributions. So as of September 18, they started paying weekly distributions. Similar to Ulti, when they started paying weekly distributions, it got a lot of attention. They started doing better. I think it's because weekly distributions obviously helps you with compounding your shares faster. Now let's look at the details of the fund. So their net assets is 991 million. So they're getting very close to 1 billion. The current NAV is $13.95. Outstanding shares 71 million. And the gross expense ratio, so everything together, 1.28. So if we look at their top holdings, as you can see, they hold their own ETFs and it is diluted. When I say diluted, it's not a bad thing. It's just that they all have about the same weighting inside of YMAX. So that is good because if, for example, at the moment, NVIDIA is doing super well and they decide to put NVIDIA at 20% and all of the other ones at 2%, if NVIDIA moves a lot in a bad way or a good way, it's going to affect YMAX a lot. Where right now, everything is about the same weighting, so the volatility of YMAX is actually pretty good. It's a bit more volatile than the S&P 500, but for an income ETF, it's not too crazy, especially considering the high yield of this one. For their option strategy, what are they doing? So for their option strategy, I pulled up AMDY. How are they generating income in YMAX? So since YMAX holds all of their single stocks, it makes sense to just look at AMDY. So for example, AMDY, what they're doing, as we can see here, they hold some US treasuries and some bonds. These are not to generate income, these are just collateral. So if they get some shares assigned from selling covered calls or buying calls, they have some collateral. And as we can see, the way they're generating income is with covered calls. So here, as we can see, they're selling 11,000 contracts at 162 strike price, and they're buying calls at 170. So what they're doing here is a covered call spread strategy. So it's a way to de-risk the covered call. Any AMD that is up to 162.5 is going to be capped on the upside because this is all written on a covered call. If, for example, the share price of AMD blows past $170, even though the share price of AMD blows by 170, YMAX is going to be able to capture some upside. And that is why if we look at the share price of YMAX, since the market crashed here, they've been able to recover, and they recovered 20%. And this is because they are writing aggressive covered calls, but they're also buying calls at a higher strike price, which allows them to participate a little bit in the bull market on top of paying some high distributions on a weekly basis. But we also have to look at the total return. So it's been a very good fund. Since inception, it is up 42%. It's been out for about a year and a half, and it has 42% of total returns, which is very good. And now if we look at the YTD returns, on a YTD it's up 13%, so that is very good. And on a 1 year it's up 22%. Here I extracted the actual holdings of YMAX as of today, July 22nd, when I'm recording this video. Like I was saying, it is diluted in a way where they're holding every single option income ETF from Yieldmax, and they all have almost the same weighting, so they're all 3%, and then they have some government obligations here. So these are all really big companies in the US market. It's kind of a concentrated version of the S&P 500, and Yieldmax keeps coming up with some high quality companies where they create those option income strategy ETFs on top of them. As long as Yieldmax keeps coming up with some new income ETFs and they keep adding these into YMAX will be more and more diluted, which for some people might be bad. For me, it's very good because the more takers we have inside of YMAX, the less volatile YMAX is going to be, the more stable the weekly distributions are going to be. So now, how do they pay weekly income? Every week, Yieldmax. And now, for example, last week, they announced the distributions for Group B. Last week, all those distributions for Group B, they will take all of those single stocks here. So these were paid on July 18 for the single stocks, but on the next Friday of the next week, so on July 25, we saw the holdings, it's about 3% per single stock. So they're going to take 3% of this, 3% of this, 3% of this, 3% of all of those single stock income ETFs. They're going to add it up together, and that's going to be the weekly distribution of YMAX. This week we had a big distribution for Palantir, for Maro, for Murni. We are most likely going to see a higher distribution from YMAX. The more single stock we have inside of YMAX, the more stable the distributions are going to be because there's not going to be as much outliers. So if some of them are lower, some of them are higher, then it's going to kind of average down, and we're going to see some more stable weekly distributions, hopefully, as YMAX keeps adding more single stocks inside of their holdings. Now let's look at the fun part. I extracted all of the YMAX distributions on every single day since they started paying weekly distributions. I got the opening price, I got the distribution amount, then I calculated the yield weekly. So on a weekly basis, they seem to be paying around 1% here, as we can see. And then annualized, like in the previous video here, I calculated the average, the median, the minimum, the maximum. The average is 17 cents, then the median is 17 and 21 cents. The minimum is 10 cents on the dot almost. The maximum we've seen on a weekly basis is 30 cents, which is pretty cool. I think this is a better representation of the current market conditions. So for the last 15 distributions, the median is 15 and 74, and the average is 15 and 86. So I use a conservative distribution of 17 cents. So I use basically the median here, and then I added a conservative factor. So I took down 10% off of this. So this is the number we're going to use for our conservative forecasts. And then when it comes to the share price, I just used the current price at the latest distribution. And then I added 5% on top of that to make it more expensive. The number of shares we're able to buy is not going to be as much. Really try to keep the numbers conservative. If we look at the conservative forecasts, so here I set my input data. So for the share price, I'm using a conservative share price, so a bit higher than the current share price that YMAX is trading at. So I'll be using $14.78. This is more expensive. This is just so it stays quote unquote conservative, and we can't buy like a million shares, it's going to be harder to buy shares. Then for the distributions, I'm also using a more conservative distribution, around 15 cents. So this gives us a yield of 55%, which is still a very good yield. For the sake of the video, I'm going to use the same numbers for the forecast conservative as well as the forecast actuals. I'll be using an initial investment of $10,000 and a monthly cash flow of $1,500. So this means that on the first month, I will buy $10,000 worth of YMAX shares, which buys us 676 shares. And then every month after that, I'll be adding $1,500 of my own money to buy shares on top of the shares that are bought through DRIP. And my goal, for example, could be to reach a monthly income or a paycheck goal of $2,500. And now what I did here to play with those settings here, for example, if I add a monthly cash flow of $2,500, you see here that my month to reach goal goes down. And now if I go back to 1,500, it goes up to 17 again. So what I did is I basically automated this part. As we can see, it will take us 17 months to reach $2,500 a month. If we add 10K and then we invest $1,500 a month every single month, on month 17, we have 3,728 shares, which pays us around $577 a week, $2,500 a month. Here we have our shares that are bought through DRIP. So this means the shares that are bought only using YMAX distributions. And then we have the shares that are bought with CF. CF is cash flow, so this is with our own cash. And these are a set amount since every month we'll be buying like $1,500 worth of shares. And here we have the cash flow increase. So basically here between month 4 and month 5, on month 5 our monthly income increased by $100. Also gives us a better perspective on how our monthly cash flow increases month after month. And we have the percentage of our paycheck. So as we can see on month 17, we're able to cover 100% of our paycheck, and then after all the other months it keeps growing and growing and growing. What's cool too is that, as we can see, to reach 100% from month 0 with those parameters, it takes 17 months. But now if we want to double our money, so if we want to go from 2,500 to 5k, now it's going to take 12 months instead of 17. And then it's just the power of compounding that's very cool to see here on this table. So here, after 28 months, we're making 5k a month, and every month we're able to buy 338 shares using the distributions, and we have 7,400 shares. Now, using the power of those 4,000 shares on top of our monthly cash flow that we're adding ourselves, if we keep investing for another 9 months, now we are up to $7,700. So as you can see, the power of compounding and the gap between each 100% of our paycheck keeps decreasing and decreasing, and our shares are compounding faster and faster. It's very cool to see that. And as we can see here, after 48 months, we'd be making $14,000 a month or $3,300 a week. Now, if we look at the actual, so the actual is, I'm just taking the current data from like the latest opening price, for example. So it's not conservative at all. And I think those numbers are probably not the most sustainable numbers, because if the share price goes up or goes down and the distributions goes up and goes down, you might be disappointed by this forecast. But this is just for fun. So let's say the share price is $14 and it pays a median distributions of 17 cents. That's a yield of 63%. It's about 10% more yield than the conservative. So it's not a huge difference, but it still makes a difference. And here, if we start with 10K and we invest $1,500 a month, it buys us 714 shares at first. And our paycheck goal is the same, 2,500. Here, as you can see, it takes 14 months instead of 17 on the conservative. And we end up with 3,400 shares. And also we can see our total invested. So the total invested here is the amount that you spent with your cash flow. So this is just the amounts that you spent with your own money to buy shares of YMAX. And the $15,000 here is the amounts that your YMAX distributions bought. You end up with a total investment of around $47,000. And out of that, 15,000 comes from your Yieldmax that just dripped. The other 31,000 came from your own investment. You basically spent $31,000 to make $2,500 a month, which is another metric that is pretty cool to see. And as we can see here, at month 14, we have 3,400 shares. We make $585 per week, and we make 2.5k a month essentially. And here our cash flow increased $200 on a monthly basis compared to month 13. And then if we want to see how long it's going to take us to double our monthly paycheck again, it's going to take us 11 months. And at month 24, we'll be making 5.2k. And then same thing, we can just look and we can see that the gap between 200 and 300% gets tighter and tighter as we keep investing and as our shares keep compounding. As you can see, between 400 and 500, it's only 4 months. And then as you can see here, 700 to 800, it goes very fast. At the end of the 48 months, we end up with a crazy 29,000 shares, $5,000 a week, $22,000 a month. So if we compare that to our conservative, so we make almost double, I would say. With the actual numbers, we end up making $22,000 a month. With the conservative, you would end up making $14,000 a month at the end of your 48-month forecast. For this section, yeah, I would say you can play around with the numbers. And now this is the cooler sheet, I think. It's where you can see how you can start using your money. So I added a spend amount column. Here, as you can see, it starts here. So let me just explain real quick. So let's say you want to put 10K down, and then you have those conservative numbers here, same as the conservative forecast. And you want to add 1.5K a month, and your goal is to reach a monthly paycheck of $2,500. It would take you 17 months to reach your goal. So at month 17 here, as you can see, we make 2.5K. And then from there, from month 17 onwards, you can start spending. Here on the spend month, I will put 17. And the spend factor, I will put 50%. So this means that I would invest 50% of YMAX distributions, and the other 50% I would keep to spend or to fund my lifestyle or to pay for bills or to do whatever I want. I might end up not spending the whole 50% and then reinvesting. So I mean, this is like more complex use cases. It's just to have an idea of what it could look like. Here, as we can see, we reached our goal at the start of month number 17. And as we can see, in this month, we were able to extract $1,300. So it would be 50% of our monthly distributions we made from Yieldmax. Every single month, our paycheck that we're paying ourselves keeps growing and growing and growing. And even though we're spending 50% of Yieldmax distributions, at the end of 48 months, we would be making 340% of our initial 2.5K goal. And we'd be extracting 4.2K out of Yieldmax distribution and reinvesting the rest. So we would be making 8.5K a month. Once you reach your goal, I think that there is a good balance and there is ways to spend your money in a smarter way. Also, a thing that is cool is that your monthly income here keeps growing and growing. And at some point, it's just going faster that you're able to spend it. Let's say to fund your lifestyle or to pay your car note or whatever, you need $1,000 a month. So at the beginning, at month 17, you would have that $1,000 and then you would have $300 left over. You might start spending it, whatever you want to do. But then at the end of the forecast, if you stayed to your plan, you would be making 4.2K a month. Maybe at the end of the day, when you pay your rent, you pay your car, you pay etc., you don't need that 4.2K and you don't need to waste your money. So you might, but at some point, if we keep going in the forecast, which I could keep going, but there's no point in forecasting too far. But there will be a point where your income will be growing faster than your spending. And that's a point where it's very cool. And that's like quote unquote true wealth, where you can't really outspend your portfolio. All right, now last scenario, just for fun. Let's see what would happen if you throw $100,000 into YMAX and you didn't add any cash flow. So you just left your $100,000 compound by itself. And your goal would be to make $10,000 a month. It would take 18 months to reach your goal of making $10,000 a month. So if you go on month 18 here, we would be making $10,000 a month. We'd have 15,000 shares, 2.3K a week. And at the end of that month, we would be buying 681 shares just with our distributions, and there would be zero cash flow here since we're not buying anything. And here, as we can see, our cash flow increases $200 a month, then $300 a month, then $400, $500. Your monthly income is increasing $1,000 a month. So that's what I was saying, is that at some point, your income is going to increase faster than you can spend it. So at the end of the 48-month forecast, as we can see, we have 56,000 shares. We're making 8.8K a week, and we're making $38,000 a month. And our cash flow increased 1.6K. So now for the fun part, the spending. So we reach our goal at month 18. So after that, let's say we want to start spending 50% of our YMAX distributions. As we can see here on month 1, since it's 10K, we're already giving ourselves a paycheck of $5,000. Our cash flow is still increasing month to month for more than $200. And our monthly paycheck that we're paying ourselves from our Yieldmax distributions are increasing and increasing and increasing. Even though we spend 50% of the distributions, at the end of the 48 months, we would still double that $10,000. So we would make $20,000 a month, and we would be making 4.6K a week with 30,000 shares. So it's crazy. $5,000 a month passively is already a lot depending on where you live. And then on top of that, the fact that you don't even need to do anything and it keeps growing on its own. And on top of that, you're spending it guilt-free. It just shows that, your portfolio will keep growing and keep growing. And once you have that foundation that is set, it just turns into a snowball that is too big and you can't really stop it. Really, what's important, I think, is to stick to a plan. This is possible. Someone could throw in 10K into YMAX from their savings or from selling shares of something else that they don't like anymore, and then invest 1.5K a month, You just have to stick to your goal for 17 months. You just have to put 1.5K in your portfolio. This is very doable. People, it's up to you to reinvest them in anything that you want, and you do not have to reinvest them in YMAX. You can reinvest in SCHD and VOO. I think it's pretty cool to just play around with numbers and see, compared to the budget that you have and your goals and whatever, how long it could possibly take, depending also on the share price and how conservative you want your forecast to be, or how aggressive you want your forecast to be. All right, guys, hopefully this was interesting. Let me know in the comments what you think. Are you guys holding any YMAX shares? Personally, it is my biggest holding from Yieldmax ETF, and I'm always planning to buy more shares. Until next time, take care.